future of Air India has some tough questions to answer, even as it reviews the strategic sale of the national carrier and considers an additional equity infusion to keep operations going. CNBC TV18 learns that Air India has failed to improve its standing in terms of market share. Ashpreet Sethi joins us now with more on that story. Ashpreet, what does the latest data from the aviation regulator, the DGCA, tell us?
While the government is exploring options to revive Air India's divestment process after the big fall, we look at the aviation regulator's data on how has Air India performed in the last 1 year. The DGCA data reveals that Air India's market share hasn't changed even one bit, despite airline adding 17 planes last year to its fleet to cater to more routes. Now, the international market share has declined by 2%, despite the lucrative routes that Air India enjoys. In fact, it's losing out its market share to Emirates, Qatar Airways and even Jet Airways. Now, these airlines, of course, are also the main reason as to why it's losing out its freight market share as well. Jayant Sinha, the MOS for Civil Aviation, had made a statement in the Parliament that Air India is losing out on 17% of its routes, which includes the Middle East. The tough times, in fact, do not end here for the national carrier, as according to industry reports, the market share will be hit further and may drop to even 10% on the backdrop of airlines like Vistara, SpiceJet, Indigo adding about 122 to 125 planes in 2019 alone. In fact, Center for Aviation reports suggest that the national carrier will be losing about $1.5 to $2 billion over the next 2 years. Now, it remains to be seen if the management and the government will be able to turn around the story for the ailing airline.
Ashpreet, appreciate you joining us there to break down the latest data from the regulator, the DGCA. We're now joined by Dhiraj Mathur, the head of Defence and Aerospace at PwC India. Dhiraj, appreciate you joining us here on the show. You know, we don't know what the government intends to do, whether it will shelve plans for the disinvestment and go forward with an IPO, which is what it is being considered at this point in time. But, you know, let's look at the operational performance. Fleet has been expanded, and yet we're seeing a decline year on year when it comes to both domestic as well as international operations. This doesn't bode well either for the disinvestment or for a possible IPO, does it?
Yeah, no, it doesn't at all. And in fact, the decline in market share is what is most worrying. Of course, there are issues around the profitability, which is a consequence of the decline in market share. And clearly, there is something fundamentally wrong. There is a problem. The only solution is for the government to exit this business as soon as possible. This is a very competitive industry. Margins globally are very thin. You need to be really agile and quick in decision-making. And the inherent governance structure of the government is such that you cannot take quick commercial decisions. Most of the public sector undertakings have the same problem, and wherever they face competition, they tend to lose out, not because there's something fundamentally wrong with them or the people, but it's just that the entire, the ecosystem of a public sector, of the government, of the requirements laid down by the financial rules, by the Constitution, you can't compete in a competitive market where margins are cutthroat, thin. So therefore,
okay, so you're saying that it's imperative that the government gets out of Air India to ensure that things pick up for the national carrier. But, you know, we don't know how long that's going to take now, because let's be clear, in round one, no expressions of interest. They're going back to the drawing board. How long that will take, the timeline that they had in place of divesting Air India by the end of this calendar year, clearly that looks highly unlikely. Whether or not they eventually go through with the disinvestment is also a big question mark. What do you believe can be done? I mean, they're sitting on lucrative routes. They fly direct on most international routes, which other carriers do not have the advantage or the benefit of. Till the government continues to be in the ownership as well as the driving position, what do you believe can be done, Dhiraj?
So, yeah, you're right. Nothing can be done in terms of exiting at this point of time, because the IPO will take over a year and a half to materialize, and besides, who's going to invest in a loss-making undertaking? The strategic partner route what the government will ultimately have to resort to. But then for various reasons, I don't think anybody is going to bid at this point of time with elections around the corner. Now, having said that, what is it that the government can do really? One, it will obviously have to make sure that the airline remains afloat. There was a financial restructuring plan. There was a equity infusion plan of the government. One of the reasons for the situation being what it is that I don't think the government has been able to fully meet up with its commitments, despite the fact that they have, I think, infused almost 25,000 crores in the last 4 years or so. I believe, if I recall correctly, the total figure was about 40,000 crores. So the first thing is obviously they have to keep it afloat and they have to pump in some money just to make sure that the airline stays afloat. The second thing that they will have to do, obviously, is to look at cost-cutting measures. So, you know, and there's bound to be some pain. Again, there's going to be a challenge, especially when it comes to, you know, looking at staff costs. Because that is one big issue,
right.
And that's one big area where there is a lot of slack, and normally that is the most obvious area to start. Some of the other areas would be less obvious, and they would require some level of study. But and I do believe that from an operational perspective, the airline has been making, just as far as the operating profit is concerned, that has been improving in the last 2 years. So operations is something where they are improving, and they need to continue working on making operations more profitable. And as far as the interest servicing is concerned, which is actually creating this loss, the government will just have to pump in equity.
Yeah, Dhiraj, before I let you go, I mean, how realistic is this IPO idea that's been floated?
Well, I think it's a bit of a red herring because, like I said, when you didn't get any investor interested, where 76% of the stake and complete management control was on offer, where are you going to find a financial investor who's interested in putting his or her money into a loss-making company, where 5,000 crores is the average loss per annum? So the IPO is certainly at this point of time not a credible option.
Not a credible option. Dhiraj Mathur, appreciate you joining us here, the head of PwC India's Defence and Aerospace business on Air India's future. Well.